These are 9 top big cap stocks with large percentage gains today. Our review on JNVR. Janover Inc. is a company that's been bridging the gap between commercial real estate borrowers and lenders through its AI-powered platform, kind of like a digital matchmaker for the mortgage world, except for apartment buildings and commercial properties. But today, Janover made a pretty bold move that's got investors paying serious attention, and it's not in real estate, it's in crypto. So here's the scoop. Janover just announced they dropped about $4.6 million into Solana, the crypto. This is the first step in their brand new digital asset treasury strategy, and it's coming hot on the heels of a fresh $42 million financing round they recently locked in. The plan? Start building a position in digital assets, starting with SOL, and stake it right away to start generating revenue. Basically, they're not just sitting on that crypto, they're putting it to work. Now, why does this matter? Well, this isn't your typical real estate fintech play anymore. Janover's pivot into crypto signals a broader ambition. The company wants to be known as the go-to public vehicle for crypto accumulation, transparent, efficient, and active in the space. It's a bold strategy, especially with their new leadership that includes former execs from Kraken, a major name in the crypto world. That kind of experience brings credibility and likely helped fuel this new direction. The stock definitely reacted to the news. Shares shot up 64% on the day with solid volume, most of the action happening early in regular trading hours. But while the price spiked, there's a bit of a cautious undertone from the market. Crypto plays can be volatile, and integrating this kind of strategy into a fintech business tied to real estate is definitely uncharted territory for most public companies. Still, for investors, this move signals Janover's willingness to evolve and get ahead of the curve, especially as DeFi adoption continues to ramp up. If they can balance their core real estate marketplace with a smart, revenue-generating crypto strategy, they might just carve out a really unique position in both sectors. It's early, but worth keeping a close eye on how this plays out. Our review on ATHR. Aether Holdings Incorporated is a fintech platform that blends analytics, sentiment data, and backtesting tools into one cloud-based software suite, sentimenttrader.com. Whether you're a retail trader trying to time a swing trade or an institutional desk digging through sentiment trends, Aether's aiming to be that go-to terminal for market psychology, charts, and algo-ready data. Now, today was a wild ride for Aether. The stock shot up 33%, but that headline number barely captures the full drama. We're talking about an 85% breakout right at the IPO open, with multiple halts going both up and down. There was another explosive 50% move midday before things cooled off and faded into the close. Volume came in strong too, over 4.6 million shares traded on a sub-$70 million market cap, so yeah, the float definitely got some attention. What's driving this kind of action? Honestly, a mix of debut hype and pure volatility. Aether's positioning in the fintech space is interesting. It's not just another brokerage or charting app. This is about marrying technical tools with sentiment data and behavioral indicators. And that's a niche that's been getting more attention lately as traders look beyond just fundamentals or momentum. Still, this kind of trading day isn't exactly driven by fundamentals. It's more about the narrative and scarcity. Low float IPO, growing interest in AI-enhanced trading platforms, and a shiny new ticker in a market that's been hungry for the next big fintech name. It doesn't hurt that the Sentiment Trader brand already has some following in the retail trading space, which can help spark early buzz. Now, whether this stock settles and builds a real floor or just becomes another one-and-done pop depends on how they execute. If they can scale their data offering, expand that institutional pipeline with the DataEdge API, and keep building trust through quality research tools, there could be something more sustainable here. For now, though, this one's riding the waves of IPO hype and trader momentum. Wild swings, halts, and big breakouts, all the makings of a story stock in the early innings. Our review on WBX. Wallbox NV, formerly known as Wallbox BV, is a Spain-based tech company that's been steadily building its reputation in the EV space. They focus on charging and energy management solutions for both personal and public use, from at-home chargers like Quasar to high-speed public options like Supernova and Hypernova. They're active across Europe, Asia, and the Americas, and they've been trying to position themselves as a key player as electric vehicles go more mainstream. Now, let's talk about what's going on with the stock. Wallbox popped 25% today, with most of that move happening right out the gate during early regular hours. This kind of breakout comes just ahead of their Q1 earnings announcement, which they'll be reporting before market open on May 7th. So yeah, a bit of a pre-earnings run-up going on here. Investors are probably sniffing out some potential upside, either from solid demand for their newer ultra-fast chargers or maybe some bullish commentary on guidance during the call. Given that the stock has been pretty beat down over the past year, even a hint of momentum, like increased adoption, more infrastructure deals, or progress in the US or Asian markets, could give this thing a jolt. Also worth noting, Wallbox is playing in a space that's part EV growth, part energy transition, and part software as a service, which makes it kind of a hybrid story. That makes it interesting but also sensitive to sentiment shifts in multiple sectors. So when you see a move like this ahead of earnings, there's a lot of speculation baked in. Whether today's pop has legs will really come down to how confident the company sounds in that upcoming call. If they can deliver some upbeat numbers or guidance, this could be a turning point. But if not, well, we've seen how quickly these moves can unwind. Our review on KBSX. FST Ltd is in the business of golf shafts, designing, manufacturing, and selling high-performance steel shafts for golf clubs. They've got their own brand, KBS, which you've probably seen in the bags of some PGA Tour pros. It's one of those niche companies that flies under the radar unless you're deep in the golf gear world, but it's got real credibility in that space. They serve big-name golf brands and distributors, and they're a fully owned arm of FST Corp. Now today, shares popped around 24%, which definitely turned some heads, especially with only about 331,000 shares traded and a modest $92 million market cap. That kind of move, on relatively light volume, can sometimes signal that something's bubbling just under the surface. Maybe it's positioning ahead of news, maybe insiders know something, or maybe the float's just tight enough that a little buying pressure sends it flying. There hasn't been a headline driving it yet, but given how low-key the stock normally trades, even modest interest can cause a noticeable spike. For a company like this, sometimes it only takes a distribution deal, a new product line, or even a retail brand partnership to light a fire under the stock. So, while this might just be one of those speculative bursts, if you're an investor tracking niche manufacturing or consumer gear with brand loyalty, especially in sports tech, FST might be one to keep on your radar. Let's see if this rally holds or if it's just a one-day wonder. Our review on Junee. Junee Ltd is a Hong Kong-based company that's all about interiors, from design and layout planning to full-on fit-outs and even ongoing maintenance. They work across both residential and commercial spaces, so think everything from stylish apartment renovations to polished office upgrades. It's a very localized business, but one that taps into the steady demand for well-designed living and workspaces in a packed, vertical city like Hong Kong. Now, the stock jumped 20% today on relatively light volume, only about 110,000 shares traded, but with a market cap of $130 million, even a little momentum can go a long way. We didn't get a big headline or press release, so this might be more about positioning or anticipation rather than something concrete, at least for now. That said, a move like this often puts a microcap name like Junee on the radar for traders watching for technical breakouts or speculation on upcoming developments. Sometimes it's just about broader attention swinging toward overlooked sectors, like real estate services or local design trends picking up steam. So while today's pop might not be tied to any confirmed news, it's a name to keep an eye on if you're tracking growth stories in Asia's urban development scene, or even just looking for under-the-radar plays in lifestyle and housing services. Let's see if this volume grows or if it cools off just as fast. Our review on KROS. Keros Therapeutics Incorporated is a clinical-stage biopharma company working on some pretty cutting-edge stuff. Their whole game is focused on diseases linked to abnormal TGF-beta signaling, which is a big player in things like blood disorders, cardiovascular issues, and even neuromuscular diseases. Their lead candidate, KET-050, is being tested for treating low blood counts in diseases like myelodysplastic syndromes and myelofibrosis. They've also got KR-012 in the pipeline for pulmonary arterial hypertension, and KR-065 being looked at for obesity and neuromuscular diseases like Duchenne muscular dystrophy. Now, the real heat today came from a major strategic update. Keros is officially exploring a sale. That news dropped yesterday, and the stock jumped 18%, with most of those gains coming in pre-market. The company also slapped on a shareholder rights plan, aka poison pill, which is often used to guard against hostile takeovers. That move likely signals that someone, or multiple someones, have been sniffing around, especially with one investor recently building up an 11.2% stake. It's worth noting, Keros isn't doing this from a weak cash position. They got over $500 million in the bank and a $200 million payday from a deal with Takeda, which gives them plenty of runway to keep the science moving all the way through 2029. So this isn't a distressed sale, more like the board sees an opportunity to unlock value at a time when the stock's been sitting pretty close to 52-week lows. Bottom line, this is one of those biotech stories where solid fundamentals are suddenly meeting strategic intrigue. If you're following small-cap biopharma, KROS just became a name to watch closely over the next 60 days as the sale process unfolds. Could be a pivotal moment for the company, and maybe for the shareholders too. Our review on USAU. US Gold Corporation is a gold and precious metals exploration company with its sights set on some seriously promising ground. They've got three main projects: CK Gold in Wyoming, Keystone in Nevada, and Chalice Gold in Idaho. CK is especially interesting. It's a near-surface, gold-copper deposit that's development stage and already showing some high-grade mineralization. Keystone sits right on the Cortez Trend, which is like the gold equivalent of Silicon Valley. Some of the biggest North American gold mines are neighbors there. Now, today's action was all about macro tailwinds. Gold prices absolutely exploded past $3,212 an ounce, a fresh record high, and that lit a fire under nearly every gold miner on the board. US Gold Corporation spiked 16% just today. Most of that jump happened right out the gate in early regular trading. On the year, the stock's already up over 60%, which puts it near the top of the leaderboard among gold names. The bigger backdrop here? Well, Trump's latest move on trade, slapping a 125% tariff on Chinese imports, threw more fuel on an already tense situation. Markets hate uncertainty, and that's where gold shines brightest. Add in whispers of a rate cut coming this summer, plus central banks stacking gold like it's 2008 again, and you've got a textbook set up for bullion to keep running. So for a small cap like US Gold Corporation, this is a moment where macro meets momentum. They're still early in the development game, but with gold prices soaring and safe haven sentiment running high, investors are clearly positioning ahead of what could be a very gold-friendly environment in the coming quarters. Our review on LOVE. Lovesac Company, best known for its ultramodular sectionals and ridiculously comfy beanbag-style sacks, is more than just a quirky furniture brand. It's kind of a stealth tech play in disguise. From their patented mix-and-match couch systems to the immersive stealth tech audio built into their furniture, they're merging design with functionality in a way that really clicks with today's lifestyle-driven consumer. They primarily sell direct-to-consumer, mostly online, with a showroom strategy built around letting people feel what the brand is all about before pulling the trigger. Now, today's move, up 16%, wasn't some random pop. This was a well-earned boost on the back of a pretty strong business update that investors have been waiting for. Lovesac just got a big win on the tariff front, particularly around their Vietnam production exposure. Basically, they've been shifting a huge chunk of their manufacturing out of China, going from 46% 2 years ago to just 13% now. That's a massive strategic shift, and it's paying off with relief from those steep import tariffs that had been eating into margins. Add to that some analysts love. D.A. Davidson just reiterated a buy, calling out how well-positioned the company is not just operationally, but in terms of growth potential too. Their newer products like the EverCouch and Sactionals recliner are resonating with customers, especially the high repeat buyer numbers. If the housing market starts to bounce back a bit, that tailwind could really help a company like Lovesac that thrives on home upgrades and living room refreshes. So today's stock jump isn't just excitement. It's a sign that Wall Street is warming up to the idea that Lovesac's not just a pandemic darling. With leaner supply chains, better pricing control, and product innovation still chugging along, it's shaping up to be a small-cap growth name with legit staying power. Our review on USAR. USAR Rare Earth Incorporated is building something that's both very niche and very necessary, a fully domestic supply chain for rare earth materials and magnets, specifically those sintered neodymium iron boron, NdFeB, magnets that power everything from electric vehicles and wind turbines to missile guidance systems and high-end robotics. Based out of Stillwater, Oklahoma, the company's vision is to vertically integrate this process, from pulling rare earths out of the ground to delivering the final high-strength magnets to customers across defense, EVs, computing, and more. Today, shares jumped 15% out of the gate before swinging pretty wildly throughout the session. And it's not hard to see why there's excitement mixed with volatility. The big catalyst here is a favorable wave of policy tailwinds. A new executive order is putting rare earth independence back into the spotlight, especially as China tightens up its export controls on these materials. That's a huge deal, considering China still dominates the global supply of both rare earths and the finished magnets. For USA Rare Earth, this isn't just good press. It's opening the door to real opportunity. They've recently launched an innovation lab that serves as a showroom, R&D hub, and sales point all in one. Plus, they're securing letters of intent from magnet buyers across multiple industries, which gives them some early commercial validation as they push closer to full-scale production. Even though tariff noise could raise input costs slightly, analysts don't see it derailing the timeline. And Benchmark's Subhash Chandra kept his $15 price target intact, pointing to how USAR is strategically checking off the right boxes: customer interest, equipment commissioning, and securing domestic raw materials to reduce exposure to overseas risk. So while the stock's jump today may feel aggressive, it's grounded in this bigger story about national security, tech independence, and a very under-the-radar space that's getting a lot hotter. If they can stick the landing on execution, USA Rare Earth could find itself as one of the few American players in a critically important global supply chain. Please subscribe, give the video a like, and watch more from our playlist. Thanks.